everyone! In this video, we'll unravel the mysteries of 3 distinct fund classifications that every investor should know, which will guide you towards financial freedom. As you know, there are hundreds of mutual funds and UITFs available in the country, and with all these options given to us, it will always beg the question, where do I invest in? As a result, we get overwhelmed. Worry no more, since this video will equip you with the knowledge you need to make informed decisions and to maximize your investment potential. Without further ado, let us begin. Inflation-resisting funds. To give a brief background of what inflation is, it is the overall increase in the price of goods and services. Why would you want to resist inflation? Because it reduces the buying power of your money if it's left uninvested. Funds such as bonds and money markets are intended for short-term investment. Bonds and money market funds are relatively safe funds that provide some resistance to inflation. Bond funds can provide more inflation resistance, but with a bit of an added risk in terms of sensitivity to interest rate movements and inflation. Wealth-building funds. Local equities, are commonly known as stocks, are an important part of wealth building. They provide exposure to businesses that operate in the Philippines. Equity index funds provide high performance due to its low cost of operation. Stock experts recognize that index funds provide great value for investors who are starting out, as it generates performance that is higher than most individual stock traders or active funds. On the other hand, if you want an equity-based fund that can potentially outperform the market, then actively managed funds such as opportunity funds are for you. It invests in securities where the fund manager sees potential for higher returns. However, compared to index funds, they are subject to higher levels of volatility, so you have to invest with caution should you want to add them in your portfolio. It is best to invest in equities for a long period of time, say 5 years or more, and to fully maximize its potential for growth. You have to practice cost averaging or putting in money into your investment regularly, regardless of how the market is moving. Global investing funds. These funds, like global feeder funds, can provide access to larger markets, regions, and industries. For example, exposure to the US market, the world's leading economy and where the majority of investors are, can provide access to more growth and more developed industries that can supplement exposure to the local market. Global investing also has its own risks. Hence, participating in it through the funds is helpful. How these funds work is that a fund manager makes the investment decisions on these markets, regions, and industries that are out of scope for local investors, which will then provide a diversified exposure to a certain market or industry, and it is settled in Philippine peso, so there is no need to convert to a second currency. Similar to equities, global funds are also a long-term investment, and with cost averaging, you can fully reap its benefits. Remember, understanding these fund classifications is the key to making informed investment decisions based on your motivation or objective. Whether you're looking to protect your wealth against inflation, to build a solid foundation for the future, or to expand your investment horizon globally, there are funds tailored to meet your needs. And through Seedbox and G Funds on Gcash, you're given an avenue to achieve your financial goals, whether it is your dream house, dream car, or whatever goal you may have. To see the funds available per fund type, please see the description below for the link to our website, or you may check G Funds on Gcash. All you have to do is start investing and let the funds do the heavy lifting. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more content like this.